I think that the banks will give Bitcoiners 550 basis points risk-free when they can custody the Bitcoin. And so the world would be very different if you got paid 5% interest on your Bitcoin while you're actually holding the Bitcoin. And I think the other thing is they will give you a loan at SOFR, which is 550 basis points plus 50 basis points spread. So you can get a loan of 6% from Citibank or Bank of America when they can custody the Bitcoin. And then the third thing is they'll let you post the Bitcoin as collateral against your house or your mortgage, and you'll be able to I think, refinance your mortgage maybe to 100% loan to value or 120% loan to value by putting the Bitcoin as collateral.
At the start of this year, the approval of several spot Bitcoin ETFs by the U.S. Securities and Exchange Commission marked a groundbreaking moment for the cryptocurrency market. For the first time in 15 years, institutional investors were given direct access to Bitcoin through these ETFs, changing how digital assets are seen and starting a fresh discussion about the place of cryptocurrencies in traditional finance, with Wall Street giants like BlackRock, Fidelity, and Millennium Management entering the fray. Expectations soared for Bitcoin and other cryptocurrencies, anticipating a bullish surge in 2024 and 2025. Numerous experts anticipated that the billions entering the market will send Bitcoin to previously unheard of heights. Even though Bitcoin hit a high of $73,000 in March, its price has since stagnated, which has investors concerned about its future course. However, there's no need to be concerned, according to MicroStrategy founder and executive chairman Michael Saylor. Saylor is adamant that Bitcoin will reach the high price goals it established early this year. In a recent fireside chat with Bill Miller IV at the Bitcoin 2024 conference, Saylor listed crucial occasions he thinks will propel Bitcoin's value from its present range to perhaps enormous amounts. Saylor also is confidently predicting a 100x increase in Bitcoin's price in the near future. Let's explore Saylor's insightful analysis and the potential impact on Bitcoin's future.
I think that there's the big three. There's three policies that accelerate us to institutional adoption. That three things that take Bitcoin up by 100x from where it is today. The first thing is to legitimize and accept and endorse it as an institutional grade asset. So fair regulation of the asset itself in the securities industry. And in January, we got the first installment of that with the approval of the spot Bitcoin ETF, but it was an incomplete regulation because the SEC still denies in-kind creation of ETF shares. And the SEC still denies the ability to trade options on top of spot Bitcoin ETF shares. And the acceptance was given grudgingly. It was basically, I did it because I had to do it, but I didn't like it, okay? So what's the significance of that? The negative opinion expressed when the approval came, that sits as a shadow over a lot of mainstream investors. We need to flip from a negative opinion to at least a neutral opinion. Like, why is it that a federal regulator isn't expressing an opinion that this asset is good or bad versus that asset? So I think that's got to change still. I think that the lack of in-kind creates and redemption means that it's a taxable event if I want to contribute Bitcoin or withdraw Bitcoin from an ETF. So if you were to invest in an ETF and it 10x'd and then you wanted to take your Bitcoin as self-custody, you're getting charged 30% of the Bitcoin. If you wanted to move the Bitcoin from an ETF to a bank or to another custodian, you're getting charged as if you sold it, even though you didn't sell it. So right now, there's a tax inefficiency. The second plank is fair accounting. Okay, if I wanted to keep you from buying anything, I would establish an accounting rule that said you can only lose money on the trade, but you can never make money. And that's a one-way ratchet. If I actually set up an accounting system where you always lose, you never win, and if you win, you have to act like you lost. And then if you lose again, you could win 99 times, but the 100th time you lose, you report one loss, no wins. Okay, that's just prejudicial and hostile. Okay, so indefinite intangible accounting allows you to lose but not win. And it's the kind of accounting you give to things you don't want people to buy. And so fair accounting was critical. And this January, it became optional. And next January, it will be mandatory. And so that's a big step forward. Let's just say we're 75% of the way along there, but we'll be sort of at 100% when you have 24 or 36 companies and they're all using the same fair value accounting and everybody's talking about it. And you start to see companies report multi-billion-dollar or 10 mega-billion-dollar gains on that accounting, right? That'll be a big deal.
One of the major regulatory changes Michael Saylor is most looking forward to is the removal of the SEC's SAB 121 accounting rule. With the introduction of SAB 121 in March 2022, public firms were mandated to include the fair value of digital assets on their financial sheets. Treating custodial assets as off-balance sheet items was a customary accounting practice. This was a big change. Financial organizations, including banks, were required by SAB 121 to record any cryptocurrency they owned on behalf of their clients as a liability on their balance sheets. This regulation essentially required businesses and centralized exchanges to reveal to the public the amount of cryptocurrency they held for their customers. Cryptocurrency investors took issue with this restriction since it made it impossible for licensed institutions to provide high net worth individuals with digital asset custody services. Michael Saylor believes that the repeal of this rule is crucial for major tech companies like Apple and Google to begin purchasing and holding Bitcoin as a reserve asset. During his discussion with Bill Miller, Saylor mentioned that once this regulatory change is in place, we could see tens of billions of dollars flowing into Bitcoin regularly. Let's hear more insights from Saylor's discussion on how these changes could dramatically impact Bitcoin's future.
And then the third is if individuals aren't allowed to self-custody, that's hostile to Bitcoin. If I pass the law saying you can't custody, that's an attack on Bitcoin. If companies can't self-custody, that's an attack on Bitcoin. If I had a company whose job was to sell custody services to institutions, if I provided custody to Yale Endowment or to a big hedge fund, and then if the government had a law that made it illegal for the custodian to provide custody for your asset, that's hostile. So right now, SAB 121 is a rule that basically makes it impossible for a bank to custody Bitcoin. And the right way to look at it is, well, that's basically a regulation preventing companies that want to custody from custodying. And so the result of that is you have basically the government saying, I guess you can buy the ETF, but the ETF is not allowed to use their bank to custody the Bitcoin, and they can only use a crypto exchange to custody the Bitcoin, and we're going to sue the crypto exchange. And so when you have the government hostile to the crypto custodian, hostile to the banks, hostile to the institutional custodian, you're kind of you're undermining the ETF industry, and you're undermining the asset. So the third plank is we just need for the SEC, the OCC, the FDIC to allow banks like JP Morgan and Citigroup and Goldman. But by the way, you might not like JP Morgan because of what the CEO has said. But let me guarantee you that within a year or 2 years of when it's possible to custody Bitcoin, JP Morgan will start a process to do that. And within 4 years, they'll be custodying Bitcoin because it's money, and that's what they do. So you want a world where Goldman Sachs, Morgan Stanley, Citigroup, JP Morgan can custody Bitcoin, because if they can custody it, they can buy it for you. And if they can buy it, they can sell it. And if they can buy it and sell it and custody it, they will give you a loan on it. And they will also give you yield on it. So the world after the banks can custody Bitcoin will be, I could have Bitcoin at a bank too big to fail, backed by $1 trillion balance sheet. They would give me 500 basis points of yield. You know how much money you get if you put your money in T-bills right now? You get 550 basis points risk-free. I think that the banks will give Bitcoiners 550 basis points risk-free when they can custody the Bitcoin. And so the world would be very different if you got paid 5% interest on your Bitcoin while you're actually holding the Bitcoin. And I think the other thing is they will give you a loan at SOFR, which is 550 basis points, plus 50 basis points spread. So you can get a loan of 6% from Citibank or Bank of America when they can custody the Bitcoin. And then the third thing is they'll let you post the Bitcoin as collateral against your house or a mortgage. And you'll be able to I think, refinance your mortgage maybe to 100% loan to value or 120% loan to value by putting the Bitcoin as collateral.
Michael Saylor argues that any regulation that prevents individuals or institutions from self-custodying Bitcoin is inherently hostile to the cryptocurrency. He emphasizes that if laws or rules make it difficult or illegal for companies or custodians to hold Bitcoin securely, it undermines Bitcoin's value and its adoption. Saylor specifically takes issue with the SEC's SAB 121 rule, which makes it difficult for banks to provide custody services for Bitcoin. According to him, this is a legislative impediment that keeps banks from storing Bitcoin for their customers, which reduces the likelihood that Bitcoin will be incorporated into traditional financial services. In the future, big institutions like Citigroup, JP Morgan, and Goldman Sachs will be able to offer Bitcoin custody services. He thinks banks will start offering different financial products incorporating Bitcoin, such loans and interest-bearing accounts, provided they can store the cryptocurrency safely. Significant developments could result from this integration, such as banks charging interest on Bitcoin holdings and accepting Bitcoin as loan collateral. Finally, Michael Saylor's observations suggest a future in which Bitcoin will play a far larger role in the financial system. Allowing banks to hold Bitcoin could lead to a number of new financial services and products that further incorporate the cryptocurrency into day-to-day financial operations. This modification has the potential to increase Bitcoin's value and acceptance by making it more approachable and appealing to a wider range of users. We hope this discussion has provided you with a clear view of how regulatory shifts could shape the future of Bitcoin and its place in the financial world. Stay tuned for daily updates and insights on this evolving topic. Until next time, happy investing.